How's it going, guys? Welcome back to Scale Up FX YouTube channel. Uh, Currently, today is Tuesday, 27th of July. We are approaching the London session. But this video is more or less gonna be a Scale Up FX Sunday setup setup Sunday breakdown, and the only reason why it's taking this long for me to release this is due to the fact that we have FOMC tomorrow, right? We have FOMC in about 13 hours from now, so I just wanted to see how the markets were going to play out from Monday, Tuesday, and then see the price action setting up for Wednesday so I can make informed decisions. Right, so let's start all the way from the dollar index. Now, what do we see on the dollar index here is we see price approaching 93.4, which is the yearly high. The high of 2021 is at 93.4. We see that we didn't really get there, but we traded into this volume imbalance here and got some nice shorts off of that volume imbalance. Now, what's my outlook? Let's start on the monthly time frame. This monthly candle is about to close in about 3 days, so that's going to be very interesting to see how it's going to close. I definitely believe the FOMC rate decision is going to impact the dollar a lot. So could we see dollar take out these highs tomorrow, or do we see dollar come back down to take out these lows, the yearly lows? So those are the two scenarios that possibly could occur tomorrow, but let's have a look on the weekly time frame. On the weekly time frame, we have sort of an M structure here playing out, and we know that the dollar has been bearish. Now, the first thing I always look for is, where is the drawn liquidity here? Where is price being pulled to? Clearly, we can see that there's a big inefficiency between 96 and 94.7. So between 94.7 and 96, there's a big price inefficiency. So I believe that before I see the dollar want to trade lower, I'd like to see us fill in this price inefficiency. We actually have two on this chart right now. We have a price inefficiency here from 98.95 all the way down to 97.7, and we have one from 96, or let's just say 95.82 all the way down to 94.65. And let's put on my markups and go down to the daily time frame so we can actually break down price action. You see here we had like this choppy consolidation while still creating higher highs. We had this choppy consolidation. Now on the daily time frame, the market hasn't shifted in sentiment to start saying the dollar might short. Drawn liquidity to the downside is the fair value gap, or the price of the inefficiency between 91.29 and 90.66. But what I want to see dollar do is actually trade higher before we come back down. I wouldn't want to see it trade into this fair value gap. Now, knowing that FOMC is a highly volatile event, we could see dollar come in here, fill this, and immediately run up for all of these highs in here and potentially trade into this inefficiency I called in at 96, and then we'll probably see a sell-off there. Now, I'm really looking for dollar to form the high of the year in the next couple of weeks, and there's a reason for that. Checking the commitment of traders report for the US dollar index as of last week, the commercials, so that's smart money, the commercials are positioned now net short on the US dollar. So they have more short positions than they had last week and the week before and the week before that, and that's the 1 year average. What does this tell us? This tells us that the commercial traders are shifting their sentiment. So they're building up a lot of short positions in the dollar, which translates that dollar is potentially topping out. Now, while that is indicating that, it doesn't necessarily mean we're going to see that sell-off start happening right now. We haven't gotten a break of structure to signify we're going to get that sell-off. So until we see a complete break of structure by taking out this low at 92,100, closing below it, and potentially retesting and then probably trading back. So that's the only scenario where I would now be looking short on the dollar. But for now, I'm still looking for dollar at least to get into the 95 psychological level. Now on the smaller time frame, took a couple trades on dollar. Sorry, my bad. Took a couple trades on dollar. I have this area marked out. This as this is an order block on the lower time frame. I think this is a 1 hour order block. Yeah. So right now, what do I see the US dollar doing? I see the US dollar trading all the way. I wanted to take out the buy stops here, and I wanted to get into this order block and then see what it's gonna do. Right now, as we know, right before news, we might not have the volatility we need because a lot of smart money algos are waiting for the decision that would be released tomorrow. As we know, interest rates are one of the most important things, one of the most important economic data releases to come out. So it will be interesting to see how the dollar shapes up for that. Now, let's go to gold. On gold, on the 4 hour, we see that I took some shorts on gold from, let's go down to the 2 hour. I took some shorts from gold here at 1805, and I took profits at 1795, so this was about 100 pips, and then I got, I left the trade, nice trade, but I'm looking for gold to get into this fair value gap, potentially into this breaker block, and then I want to see us aggressively fall from there. My point of interest here is for us to take out this, level of this demand level here. As you can see, it's acted as a demand level for the whole month of July here. And that's so interesting because in here we have a big ass range. Sorry, pardon my French. We have a huge range, and I'd like to see that range taken out and possibly us trading lower to 1775, but that's only if we can get into this fair value gap up here. So my point of interest here is from 1816.5 up to 1820. If we clear 1820, I'm not looking for anything on gold. We also have this big fair value gap here that sort of got tapped into, but I'd like to see us get into at least the 70.5% of the fair value gap. So my ideal entry would be 1845 for a possible short lower, but my bias on gold is still bearish as of now. Let's not forget that the Delta variant is rising as well. The Delta variant of the COVID-19 virus is picking up momentum in countries around the world. And what we might see with that is a lot of flight into the safe haven currencies. So dollar, yen, all getting stronger while foreign currencies are being slammed. Euro dollar was an amazing setup. I took longs in here and absolutely met my target. We've traded now into this huge fair value gap. Now it will be interesting to see how price reacts off of it. I'd like to see price get into this order block, possibly the 1.18500 institutional level, and trade off. We had a break in trend line to fake out retail traders and then rally higher. So I'm just going to take that off. On the lower time frame, 15 minute, until I'll be looking for the sell stops to be taken out. We are divergent as well. I don't have the indicator up here, but I can tell divergent plays when I see them based on the levels, which I'll be going over when I start teaching some of the concepts that I use to trade. On Euro GBP, I have a couple of setups I'm looking at. I'd like to see Euro GBP get into this fair value gap, potential breaker block area and sell off. As you can see, I am in longs at the moment, looking for 100 pips back into this fair value gap and then potentially say trade lower. Euro JPY still looking for shorts from this optimal trade entry area here, just based on the fact that we have got a lot of other orders here and a lot of retail traders will be buying this area. So just have a minimal risk of 20 pips on that. GU is very interesting trade for me. I didn't expect GU to get this high in the market, seeing as we've completed level 1 consolidation, level 2 consolidation, level 3 consolidation, level 4. So what I want to see on GBPUSD is something like this, potentially back either into here or even into this fair value gap, while taking out retail trendline traders. As you can see, we have the trendline phantom here. So I'd like to see that we have a pennant structure with a lot of people took longs in. So I'd like to see them liquidate the sell stops in here going into FOMC. Right, so going into FOMC, I'd like them to liquidate the sell stops and possibly even trade lower. We could get a bounce from this short-term order block, which we didn't get a full bounce, which we didn't actually tap into yesterday. So I'd be expecting us to get some sort of bounce from here and maybe a trend line play as well for retail traders to keep going long, and then we could potentially see like a sort of something like this. So a lot of people getting for buys here, and then we go in here and then we just absolutely melt from there. Right, so that's what I'm looking at on GU. I'm not going to look at GBP Jpy because my bias still remains the same. I am bearish on GBP Jpy. We've had a huge rally to the upside, repricing all the bearish moves we've had to the downside. So what I'm looking for is actually for GBP Jpy long term to come back into this area of demand. You see this choppy consolidation zone here. There's a lot of orders sitting here that need to be mitigated. So I'd like to see GBP Jpy come here. We definitely have broken structure here. So my view is still very bearish on GBP Jpy in the coming days. Now GBP Aud is at an interesting zone. I am now short on this pair due to the fact that we have traded into a volume imbalance, a breaker block, and we have a gap here that was set in May last year during the fall. So the risk of markets of COVID caused this whole drop. So I'm looking for GBP Aud to actually get back into 1.84 areas. I'd like to see that due to the fact that while we're now in a bullish market structure, I'd like to see a steep retracement based on the fact that we might be moving to a risk-off sentiment market. Now that we've repriced into this fair value gap and this volume imbalance, I'd like to see the market makers, so central banks, reprice lower. We have a bunch of fair value gaps in here. We have a trendline phantom setting up. So what we could see is we'd like to see this sell stops taken out, and possibly we could rise from there again for another rally higher. Keep in mind we're still very bullish, but I'm just trying to catch the retracement back down based on the fact that we are now in this point of interest, my point of interest drawn out from the daily time frame. We have an order block in here, fair value gap in here, like I said. So I'd like to see a steep rally down from on GBP AUD. For US dollar CAD, I am really bullish on this pair. There's this short-term order block here. I want us to actually dig more into this order block, right? I want us to dig more, possibly take out this trend line here, and then rally higher, right? This trend line has been taken out. I want us to take out this trend line and come back into this fair value gap. As you can see, we have huge price inefficiency here. And we're still keeping it open. We've left it open. It'll be interesting to see whether we can get a trade into this fair value gap or this order block. pre-FOMC and then see what happens by then. Or maybe we get a drop into this order block pre-FOMC and we start looking for longs after we will clear out certain sell stops, because what you're looking for in when we have some big news releases like FOMC is we want to see certain things get liquidated. We want to see sell stops get liquidated. So I won't be surprised if they hit for because this was the last big move, and if we pull off fibs from the body to the body on the hourly, we're currently sitting at the 79 fib and currently ranging around it. So I'd like to see us take out these sell stops in here, dig into this OB, possibly this sell stops, and then rally higher, because I am relying on the dollar with FOMC in focus. So with that being said, just glad I was able to make this video, and I hope it gives you some insights into what you should be looking for and how you should be going about trading the FOMC news release, which will be coming out at 12 p.m. Mountain Standard Time, which is 2 p.m. Eastern Standard Time. If you have any questions, let me know in the comment section. Make sure you join our free Telegram community and look out for more videos that will be coming your way. Will be more geared towards teaching you certain concepts that have really helped me become a long-term profitable trader, as well as a trader who year in, year out, month in, month out ensures doesn't get burnt out by the market. Because remember, this is a longevity game. It is not one where you expect quick profits. It is one where you have to be able to go through different market conditions, weather the storm on different occasions, and what you want to see yourself do is always come out on top. And how do you do that? Risk management. It's the most important thing in trading. It's none of all of this, because you might be very good knowing where price is going, understanding price delivery, how price will be delivered from certain zones. You understand the draws on liquidity and things like that. But regardless of all those types of ideas, it is still very, very tough to be able to more or less stay long trading this market, because you might be so overconfident on a certain setup, and that setup is just going to disappoint you, right? So risk management is extremely important, guys, especially going into a high impact news event like FOMC. I'd expect you to please manage risk. And yeah, thank you so much, guys. Subscribe to my channel, like, comment, and I hope to see you out of free Telegram community. All right.